Welcome back. You're watching Midcap Radar on CNBC TV 18. Let's pull up the chart for HEG as well as Graphite. Both of these companies are electrode makers, and in today's trading session, they're trading with good gains. When we look at HEG, it is up almost 6%. Graphite is trading with a gain of almost 4.6%. But we have a management lined up on the show. Insecticides India is in focus. The stock is gaining in trade after reporting a good set of Q4 numbers. Revenue surged by 31% and margin came in quite healthy. Management expects to launch at least 6 more products this year. To discuss this and more, we now have Mr. Rajesh Aggarwal, who is the Managing Director at Insecticides India, joining us. Mr. Aggarwal, good afternoon. This is Vamakshi. Thank you so much for joining in with us. I'd first like to start off by asking you about the kind of growth guidance that you have for FY26. You've given a double-digit growth guidance. Now, you only managed to grow the top line by 2% this year. What gives you the kind of confidence that you will be able to achieve this double-digit growth guidance?
If we talk about 25, it was a very disturbed year. The rainfalls were very erratic. Number one. Number two, we had a lot of launches. Like if you see, we had about 12 launches which happened in the last fiscal. But all these launches came almost at the fag end of the season. So we did not get the time to establish these products, but the response for these products is very nice. So much so that our largest range, which is we call it Focus Maharatna. So these are the products which sells in large volumes, and they are the premium products for the company. So we are adding from last year introduction 4 products to the FM range, which means they are going to be the star products for this year. And we are launching 6 new products. They are also very interesting molecules. So we are very, very confident that this year we should be able to register the top line growth as well as the bottom line growth.
Sure, and the double-digit growth, this is now a very broad range. So could you narrow it down for us? Would we expect maybe, say, high teens or would it be early teens kind of double-digit growth that you're factoring?
Like when I have to give the projection, I'll always say 10% should be good actually. So it will be 10% plus. So now let's look at the season and the achievements. So since last year has been very subtle growth, so I don't want to give very aggressive numbers. So we'll retain with 10% plus or lower teens or whatever you may say. And let's see the future.
Okay. Mr. Aggarwal, let's talk about some of the partnerships that you have with a few multinational corporations. You have partnerships with Nissan, OAT, Agrio, as well as Momentive. Especially when it comes to Nissan, we understand that it's almost 1/4 of the top line. So how's the partnership progressing? What has been the kind of launch pipeline as far as new molecules are concerned? And what has been the response, especially in that particular segment? FY26 onwards, what will be the contribution from Nissan and the other 2 large partnerships?
Nissan is a very important partnership we have. We have lost almost half a dozen products from Nissan's stable, and many of them are still patented. And they are number 1 products in my segment. Like if I talk about Shinva is the top product in my segment and giving us the gross revenue of more than 150 crores, followed by Hachiman, which again from the stable of Nissan. It's doing very good. Almost 70-80 crores of revenue comes from Hachiman. And then there are lots of products actually which are doing very good. Pulsar being another 50 crore product. Then we have Izuki. So all the products from Nissan are doing good actually. And now we are introducing Altair, which is a new rice herbicide. So yes, this year is, since it's a start year and it's a little expensive molecule, which is going to control the weeds, which are very difficult weed to control, and the farmer has to invest a lot of money in doing the manual weeding, and he spends about 4,000 to 5,000 rupees per acre in doing this manual weeding after using the multiple sprays of the chemicals. So we are going to eradicate those weeds with this product. So I'm very, very confident that this should turn out to be a very good product, particularly for the areas where the weed population is very high and water availability is little limited. So these are the areas of central India, eastern part of the country and southern part of the country. So we are going to go very aggressive here.
Mr. Aggarwal, can you quantify the opportunity for us, the contribution, as far as FY26 is concerned from these molecules?
This year we'll go subtle. We'll go with a target of about 15 crores in mind, but we'll be multiplying it by at least 2 or 3 in the next fiscal.
Sure, and you managed to achieve your EBITDA margin guidance of double digits. So EBITDA margin at the end of FY25 stood at 11.1% with these new launches that you're doing, along with the products that you launched last year, which were not able to ramp up last year. This year, what is your EBITDA margin guidance?
So guidance will be the double digit guidance, but it will improve further. Because of this, the entire growth, what we are projecting is going to come in 26 is going to be from Focus Maharatna and Maharatna products, which means that the profitability is going to be better and will surpass the last year in terms
And
of.
how much better would that be?
I don't want to give the numbers again, but we'll surpass those numbers and first quarter will be evident.
Mr. Aggarwal, if we understand, you classify your products into three categories, the Focus Maharatna, the gold as well as the silver. Now, when you're talking about, the first category, which is the Focus Maharatna and Maharatna, almost 50% of the total top line is coming from this particular segment. We understand that is also a higher margin segment. Going forward, what is the ideal mix for you? Are you looking to ramp up the contribution to the top line from these two categories themselves? And what is the visibility that you see?
Yeah, definitely. That is our vision, actually. We want to take it to 70%, but it will take 3 to 4 years.
And that timeline? Yeah.
And 3 to 4 years from here. So we have already achieved 61% in this fiscal and we'll be improving it further in this FY26. So we should be able to improve it by 2 to 3% actually from here. 61 to 63, 4, we should be able to do actually this year.
Sure, and when I look at your working capital days, they have actually gone up to 122 this year as compared to 109 last year. So when do you expect this to normalize? And, how much reduction can we expect in the working capital in FY26?
Actually, the inventory increased a little at the end of the year because it was a strategic move because we had to introduce a lot of products and we were also starting up the new plant. So we had to arrange for the raw materials. It increased little extra. I know that, and we are working on that, and we have already started working on economizing everywhere actually and improve the efficiencies, particularly in the working capital, in the inventories, in the projects, everywhere we are working. And the good news is like we are getting the permission for starting the Dahej plant, which was long overdue. So we are going to start that plant also from the month of June. So things will improve. You will see some improvement happening in Q1 itself. And I think by Q2, end of Q2, by August, we'll normalize 100%.
Understood that. Currently, in terms of capacity, do you have sufficient capacity on stream? What is the current capacity utilization levels at various facilities? And plans to ramp up any capex plans?
Yes, capex plans are always there at Insecticide India. We have just completed our expansion at Dahej, and still there are some small things which are in process. So for the current fiscal, we are targeting the expansion at Sotanala, Rajasthan, where we are going to spend 100 crore rupees in our expansions. Majority of it is going to go in Sotanala, and then there is some small maintenance capex which is going to go across the plants. So at the moment, we are 100% utilized because we are under pressure. The rains have started before time. The pre-monsoon showers are good. The expectation from the market is very good. Huge demand for herbicides, and it is very difficult to meet out that demand at this moment. So the plants are working day and night, 24/7 at full capacity.
Sure, and you were also looking at registrations in the US and other countries, if I'm not wrong. So, by when will you be completing these, and what is the opportunity size that is there for you? And the export contribution currently very minuscule, 5%. Where does it go?
Insecticide India is basically a domestic market company, but we are investing a lot on the registrations. So we'll start our America business this year. So expected, like the trial quantities are going to go in this quarter itself. And after this, the success of the trials, then we'll start it commercially. So I don't want to give big figures for the international business, though we are going to start some business in Japan, some business in America, some business in some other countries. So, but still, like our guidance of 200 crores, which is there for last 2 years, we are not able to reach there in exports. We are going to keep it same. So, though my team is little jittery with 200 also, but we'll keep it at 200 crores because I don't want to downsize my target of exports. But I'm very, very confident that we'll be meeting it with the domestic sales, whatever are the gaps. And in totality, company will have a 10% gain. And of course, we are investing a lot on these registrations and expect a good success out of it. Though the timeline, it may, if we don't achieve 100% in this year for the export business, then export business will cross 200 crores in the next fiscal for sure. That I'm confident.
All right. Thank you so much for that, Mr. Aggarwal. Wish you luck for the year ahead. But as we slip into a very short break, here is some good news for our viewers. India's business news leader is now only a click away. Introducing CNBC TV 18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC TV 18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen.